Welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for October 19, 2008. AccendoTraders.com, effective trade plans delivered daily. Each night, we put together a video to help prepare us for the next trading day. We want to make sure we're on the right side of our trades. On the weekend, or part of our technical analysis and preparation, we want to look at what some of the blogs and newsletters are saying about the market. We also want to pay some attention to the trends of the sectors. Always scanning for new trades, setting alerts for those new trades, but most importantly, by having a trade plan, we have time to spend with our family. What a week, huh? Dow up 400 points, S&P 41, and the NASDAQ up 61. But that doesn't really tell the story because who needs Six Flags when you have the ultimate roller coaster that is the stock market? The S&P 500 had the biggest gain for one day this week, and at the same time it had the second largest drop for one day. So obviously the volatility continued this week. Reports of forced liquidation, we talked about that last week. But at the same time, maybe some of the credit market strains are ending or easing as we have the U.S. Treasury doing all that it can to guarantee interbank lending. The S&P moved 9.5% this week. However, in all of 2007, it only moved 3.5%. So certainly was a big week. On the corporate headlines, we had Morgan Stanley receive an injection of $9 billion from Japanese bank Mitsubishi. The third quarter earnings seasons kicked off, and we had that one day where Google and IBM, well, IBM already pre-announced its earnings, but they both announced good earnings. But at the same time, retail sales numbers showed that a 1.2% decline in September, and according to the Fed's base book, all of the 12 financial districts are showing slowing activity. So certainly we have all types of news, good and bad, all over the place. Volatility is concerned. Volatility hit a record, I believe, above 70. It's come down from that point. At one point in time, it was 50 was the high. This week, we got leading indicators, nothing on Tuesday, crude, initial claims. Friday, we have existing homes. So basically, as far as economic news, we don't have anything this week. Nothing huge. The OPEC is talking about meeting, and since they've seen oil prices drop 50% from its high, they're probably going to announce another reduction cut in production. Not sure how much that's going to affect the market. But again, going into tomorrow, we have leading indicators before the market. Earnings, not really that much. You know, WFT used to be a stock that we like to trade, SanDisk, and the sector. But this week, you know, again, we talked about earnings season is in full flesh now, and you can see we got Caterpillar, Lockheed Martin, Apple, Yahoo, ConocoPhillips, Amazon, Novell, Potash, UNP, PCU, Microsoft. So definitely this week may be controlled by earnings since we are light on the economic news. And nothing on the splits calendar. So as we look at the sectors, what we're going to see is a bunch of W patterns, some bottoming patterns. Of course, we're not saying that the market is this is the low, this is the bottom. Anything can happen here. But what we're going to see in general are a bunch of W patterns. You can see with agriculture, we're coming down, up, tested 20, coming down. So the conservative play from here is when the market breaks to 20, yeah, you might feel a little bit more comfortable about your bullish plays when it breaks the 20 moving average. Certainly, you can be more aggressive and try to catch this push up. But again, this is going to be the theme that we're going to see as I go through the charts right now of all the sectors. We're going to see this W pattern forming, all except for airlines. Check out airlines. Where are you at? Look at airlines. Airlines came down and just took up. They already did break the 20 moving average. Now, why is that? As oil is dropping, airlines are taking off. So that basically makes sense. But you should also see the same thing in some of these other shippings. So again, here we go. Agriculture could go either way. If we can start breaking up this way, that'll be good. Remember, pot has earning this week. Look at oil, again, coming down. Notice again that they're all failed at the 20 moving average. So that's really probably going to be a real nice indicator it can give us to let us know that we can buy into this bounce, buy into this short-term rally. Steel and iron, see again, forming a bottom here. Gold, well, okay, so gold has definitely been weak, and I would not be going bullish on gold at all at this time. Consumers, there's that W pattern. Banking didn't come all the way back down. I retested lows, so that makes you feel a little bit better. Certainly with all the government buying back into that makes you feel good. Let's jump down to retails, W pattern. Casinos, W pattern. Computers, there's that W pattern. Software, there's that W pattern. So again, that is our theme for today. Just a bunch of these coming down, going back up, testing the 20 moving average, and now coming back down, basing, and potentially ready to move up. Look, one more. Here's internet. Again, coming down, failing at the 20. So that's what I'm going to be watching for. What happens as the market comes back up into this 20 moving average. Okay, and now it's time to move on to our education portion of our video. And we're using the book Trading in the Zone by Mark Douglas. Chapter 3, Taking Responsibility. But we're moving on now to winners, losers, and busters. And he talks about how that it takes some time for traders to either quit because they've lost all their money, or more importantly, they just can't take the pain of losing anymore, or that they find out what the true source to their success is. But while they're in that battle of trying to become a consistent trader, some traders go through what is called a boom and bust cycle. And I think we all go through this. And specifically what we're talking about here is that we spent the last couple months talking about the self-sabotage. Euphoria and self-sabotage are two powerful psychological forces that will negatively affect your bottom line. And we spent the past couple months talking about self-sabotage. Self-sabotage is when, because you're emotionally engaged in the trade, you blind yourself to the facts. You eliminate the facts. It's like being in a relationship. When you're in a relationship and all your friends are like, she ain't no good. She ain't no, this girl's not good for you, or she's cheating on you, or whatever. And, and what does your friend say? I love her. She loves me. And it's not until she really does break his heart that he realizes that the friends were right all the time, because their love blinds them to seeing all the bad things that this partner is doing to them. It's the same thing in trading, that your emotional involvement in the trade blinds you to seeing all the signals and indicators saying, get out, get out. But on the other side, euphoria can also be a negative effect on your bottom line. Overconfidence. Euphoria leads to overconfidence. It leads to thinking that you can do no wrong. It leads to you breaking your rules. He goes on here to say that when you're winning, you are least likely to concern yourself about the potential problems, especially something that feels good as euphoria. One of the primary characteristics of euphoria is that it creates a sense of supreme confidence where the possibility of anything going wrong is inconceivable. It's when you are winning that you are most susceptible to making mistakes, overtrading, putting on too large of a position, violating your rules, generally operating as if there's no reason for you to have rules and there's no reason for you to be within boundaries. You're just all about it. And, again, I've been in that situation where, I was on a streak and, I didn't put a trailing stop on because, I'm right. Who needs this? I'm on a roll. And then my money rolled right on out behind me. Specifically, what I want to focus here on is when people have a profit, you got to put in a trailing stop to lock in that profit. Making money is far better than losing money. And, sometimes you feel confident, oh, this trade is going in my way. I got it. And then all you really do is the market reverses on you or something goes wrong, especially in this volatile market. You got to trade by rules. You got to remove emotions from your trading. So we're going to talk more about how euphoria can affect your trading also. To get the full podcast version of this video trade plan, those of you on YouTube, you're getting 10 minutes. This video is normally 30 minutes. So you can subscribe to the podcast there at accendotraders.com/subscribe podcast HTML. You can also, we only put this out on the weekends, our free versions on the weekend. However, if you want to get our daily video trade plans, you can sign up for our daily video trade plans at accendotraders.com, video.html. Our blog, which will also have the full version of our podcast, but it's the last place it gets it, is blog.accendotraders.com. And check out the 30-day challenge. 30-day challenge at accendotraders.com. We had some technical difficulties this week, but I've bought some new software to get these videos back up and going. So check that out. And as always, trade your own risk. Thanks, guys, and I'll see you next time.